friends, I'm AngelaRizzi, your resource here in Naples, Florida for buying, selling, and investing in real estate. I'm sure by now you heard about the big, beautiful bill. And did you know what this huge tax bill that President Trump just signed includes? It could cut thousands off your next home purchase and shake up markets between New York and Florida. So what's really in the One Big Beautiful Bill Act? Well, for one, mortgage insurance deduction is back, and this time for good. So for anyone putting less than 20% down, think VA, FHA, conventional PMI, the premiums you pay are now going to be tax deductible. That saved the average borrower over $2,300 the last time this was allowed. So next, the mortgage interest cap, that stays at $750,000 forever. So the mortgage interest deduction provides a tax benefit for homeownership, not available to renters. This is very helpful in eliminating some more tax. Next is the SALT cap. This has been talked about a lot. So the SALT cap quadruples to $40,000 all the way through 2029. So if you live in a big state income or property tax state, say New York, New Jersey, California, you can now deduct up to $40,000 instead of $10,000. So that's a huge savings. This does phase out for high earners over $500,000 adjusted gross income. So it's quite a savings for those high tax states. Another big ticket is the bonus depreciation. So 100% bonus depreciation is back. This is great news for real estate investors running cost segregation studies and huge opportunity for tax savings overall. Think using it for amplifying your cash flow, fund the renovations, and eventually scale your portfolio. Supply side changes that we can't ignore. So Congress didn't just stop at tax breaks for owners, they juiced up the supply as well. So this is great news. 12% permanent boost to low-income housing tax credit allocations. This is expected to finance roughly 1 million rentals between 2026 and 2035. So this is huge to bring some low-income housing solutions back into the market. We also have rolling 10-year opportunity zones and permanent new markets tax credit, which means more incentives for mixed use and workforce housing. So what's the bottom line? Well, that brings more subsidized rentals, meaning fewer renters that are going to be crowding that starter home lane, which is good news for first-time buyers, say 2027, 2028. So what are some things that you should do now? Well, first, you want to run the itemized versus standard deduction math with your CPA before you assume that you'll benefit. Another thing, if you need a high efficiency HVAC or solar, lock that in now before the energy credits sunset after the 25-26 year. Also, you want to watch out for the low income housing tax credit award announcements, the projects that are greenlit this year, because they'll become the comps in 2027. Also, shop lenders for monthly versus single premium mortgage interest strategies now that those premiums are deductible. As always, consult with a qualified tax professional because they'll want to walk you through all of these options that you have available to you now. So who wins in this? Well, let's see. For first-time buyers, they're going to get a lower monthly mortgage interest cost and tax write-off, which equals $400 to $700 per year in after-tax savings. Then we have the move-up buyers in the high tax states. So that SALT bump is going to restore their buying power. Investors, they're going to have bigger deductions as well and will allow them to do more investment into single-family rental portfolios, meaning more competition for the entry-level products, primarily in the Sun Belt. Florida and other low tax state residents, they don't get the tax no SALT windfall, but mortgage interest and standard deduction changes really help a lot. So if you're thinking about buying or selling in Naples, Florida, or you want to explore some of these options, please drop me a line or DM, schedule a call below. Also, if you found this information helpful, please hit that like button and share it with your friends.